Hello, this is John Kicklighter, Global Head of Content for StoneX, here to discuss market conditions in the next week, the first full week of trading this year, and the top event risks that global investors will likely be focusing on. Now, starting with the general conditions with which we are entering this new year and this new week, we aren't really given a clarity on what kind of convictions we have, whether it be risk on or risk off, nor do we have a clarity on what kind of theme the markets are going to attach themselves. This is very important because this is what's going to ultimately be deciding the kind of tempo, much less the directionality that we can expect. But first and foremost, I'm going to be watching the backdrop market conditions. I'm going to be looking for liquidity and volatility. Now, normally when we look into the opening week of the new trading year, there is a rebound in volume and a slow rebound in volatility, but it takes its time to really get going. The first full week of trade also has generally an average or skew towards risk on. However, we need to be a little bit more mindful of that kind of expectation because into the end of this past year, we struggled to really keep consistent with that. And we ended off the past year with a high expectation of risk appetite or risk on. And we really didn't see a significant unwinding of that excess. Now, some might point to that being a benefit or a boon to the risk on consistency. Others might say, well, we're really living on a discount and covering that discount mentality, and that doesn't give a lot to cover. It is important to maintain the expectations of seasonality, but really keeping tabs on when volume and volatility and participation are really coming back. Now, in general, the markets I'm going to be watching for cues to the broader market and looking for individual opportunity, I'm going to look for benchmarks and their performance and their depth. I like the NASDAQ 100 as a key for the U.S. equity indices, specifically if you looked at the NASDAQ to Dow ratio, or maybe even the S&P 500 when you look at the S&P 500 versus the RSP ratio. That is the tech to blue chip and the NASDAQ to Dow ratio, or the trade-weighted market cap heavy to equally weighted index of the S&P 500. Those give us good consistencies in concentration or dispersion. And if it's dispersion and it's all risk on, that's a little bit more confidence inspiring than if we just keep chasing tech heavy large market cap stocks. I'll also be watching the dollar. It's important to just keep a tab on the DXY dollar index, which is its lowest 20-day ATR or measure of volatility in over a year. So we want to see the activity that takes up, especially considering the coming week is very heavy in terms of US fundamentals. So that's going to be very important. And then I'll also be watching some of the pre-existing volatility from both gold and silver, which managed to carry a lot of volatility through that holiday trading condition. Now, in terms of themes, like I said before, there isn't a consistency on what is actually market moving right now. We haven't seen themes of rates pick up. We haven't seen concerns over growth or optimism over growth really take control, nor is trade really a big consideration as of right now. You can see these types of activity or interest through measures like Google Trends. But we will probably pick up on one of these themes. It's just a matter of time. The consideration for interest rates, maybe this week's event risk can generate some interest in U.S. specific interest rates, which is most controversial and arguably the most influential globally. But there's no guarantee of that. In terms of growth, there's uncertainty and other themes like the deficits of the United States and other countries really aren't generating a lot of traction now. So we just want to see what starts taking the lead on the broader market's thematic interests. And that's something we're just going to have to watch with time. In the meantime, we do have to see if a theme is going to be driving risk appetite, or if risk appetite, that'd be risk on, risk off, is driving the markets itself and just looks for justification for its momentum after the fact. So do keep tabs on the correlation of risk-oriented assets like equities, emerging markets, high-yield fixed income, crypto, and see if they're aligned. If they are and they're moving strongly collectively in one direction, it's usually indicative of sentiment that's driving markets. And then we can see if there's a fundamental theme that they will later pick up on. But I will be watching that. We have some mid-level ranges for the past month, 3 months. on a lot of these risk-oriented assets. So there's not a clear consistency on sentiment either. I know that we're near record highs for U.S. equity indices, but that doesn't necessarily reflect on conviction. Now, when we're starting to look to the calendar to give us some activity, there is some interesting stuff on the docket. It's really going to kick off later on in the week. But in general, I think it's going to be very U.S.-centric. Now, on Monday, we start off with the measure of, let's say, China's PMI. This is not the official government reading, but this is now the rating dog PMI for composite and services. But I will be watching on Monday the U.S. ISM manufacturing activity report. This is important in terms of the context of the economy, all the trade wars, which were in part expected to bring manufacturing jobs and activity back to the United States. It hasn't really proven through in that case, but now we're watching it for its gauge on contributions to economic activity and employment, which is not positive. Tuesday is very light. I'll be watching Japan is selling 10-year JGBs or government bonds. Given all the circumstances there and a lot of speculation, I definitely am particularly interested in the Japanese yen and the USD JPY exchange rate in particular. So you want to watch events like this and also their other activities on the monetary side. On the U.S., we have the U.S. Logistics Manager Index, LMI, which probably won't move markets, but it is good to absorb into our big picture assessment. On Wednesday, we have Chinese FX reserves. So that shows the amount of interest that they have in foreign capital, in particular treasuries. So that's going to be quite interesting. And you have a slew of other indicators that I think are worth watching. You have Germany's jobs figures, you have Eurozone's inflation CPI. You also have the precursors to the week-end employment figures for the U.S. We have the ADP private payrolls, and I believe the JOLTS is not confirmed as coming out, but I'll be watching those. And of course, the ISM service sector activity report. That is a better reflection on U.S. economic activity and will tell us how strong or weak the economy is. This is actually quite important. Keep tabs on it. Thursday, the Japanese FX reserves figures. So we'll see how much the capital is flowing in and out of the country up to the month. And we also have U.S. trade balance for the month of October due to the delay on that data, but now it's starting to catch up. And I'll also keep a note on the New York Fed's CPI expectations figure, because that can be a precursor to the other Fed focus on the dual mandate inflation. And then Friday is when all the fireworks happen. U.S. non-farm payrolls. This is actually catching up. So it's going to be December's. It's happening on a Friday. We haven't seen this in a few months. Watch for revisions. This is more of a detailed report, but it is very important in terms of where we left off December with the Fed and uncertain of its interest rate projections, especially with the market arguing that one more rate cut in 2026 forecast. We also have the University of Michigan Consumer Confidence Report, which is floundering and very near its series low. We want to see this as a reflection of how the U.S. consumer is really feeling, because they are the engine of the U.S. economy. I'll also make note of the Canadian jobs figures. And I'll also say the week after, we're going to get into some interesting things, potentially the IMS Eco Update, but more importantly, we're going to get into the earnings season. So definitely keep that in mind as we set expectations for this week. It also carries in terms of anticipation to the following week. Well, that wraps up the week ahead. Don't forget to like and subscribe for more financial market insights.